The Bank of Namibia has launched its debt issuance program. For more, we are joined on the line by Shaun Namaseb, who's the portfolio manager at Capricorn Asset Management. Shaun, thank you so much for making the time to join us today. I think perhaps before we start going into the more details about bonds in Namibia, what has the appetite been like in the market when it comes to bonds?
Well, looking back in 2013, 2014, there was a target issuance of around about 2.4 billion. They actually ran a shortfall of about 300 million last year, mainly in the GC 25 through to 35 area of the curve.
Now, you mentioned that GC 25 and 35, and those are your government codes for your longer term bonds. The shortfalls were there, so what does this tell us about the market's appetite for long term bonds?
Well, we'd firstly have to remove GC 35 from that equation. I think the shortfall only came through due to some opportunistic tendering by some of the market participants during the year, and Bank of Namibia was just not having it. However, when we reached the 27 through to 35 space, we actually seem to have quite a bit of a drop down in the number of participants eager to take up those longer durations. I mean, banks they don't really choose to take up such debt in those areas due to lower liquidity, and mainly because these also represent the newest bonds in the government's funding structure, and their combined issuance outstanding is around about 1 billion. That's across 4 issuances.
Mm-hmm. Shaun, also looking at Namibia's budget deficit, we are currently sitting at about 7.6 billion Namibian dollars. What's been driving that?
Well, it's mainly once again due to an increase in operational and development budget. The usual suspects, if I can say, are still main beneficiaries to that, mainly education, transport, defence. It is, however, important to reiterate that expectation is for budget deficit to tighten this year at 5.5% versus 6.4% in the previous year.
Let's talk about some of the funding strategies that the government has put into place. How exactly are they hoping on filling or funding this deficit at the moment?
Well, they're looking to tap an additional 1 billion from South African market. That's on the NAMA1, which is currently traded on the JSE. On top of that, they've decided to issue 2 new bonds. That's the GC37 and the GC40, and as well as increase issuances across the curve, mainly focused on the 27 and 25 and shorter duration space.
But Shaun, you make mention of these 2 new bonds, the GC37 and GC40. These are even longer than the GC25 and GC35, the ones that we didn't see such a strong demand for. How do you think that the South African market is going to respond to this? What's the appetite going to be like for the even longer term bonds?
Well, firstly, the Namibian market, it's only 60 million on each issuance that we're talking about here. So I believe there'll be some uptake on those issuances. With regards to spreads, I don't foresee government of Namibia paying up much on those issuances due to the low volumes that they are going to be bringing to market.
Shaun, thank you so much for taking us through the debt issuance that's currently happening in Namibia. That was Shaun Namaseb, who's the portfolio manager at Capricorn Asset Management.